What are you saying would be some of the key worries or key things that you and your team are focused on right now?
Well, good morning. And as we turn the corner into 2021, we're still going to deal with the lingering effects of the virus in early 2001, and that's going to probably lead to some weaker economic data. For example, this Friday we had the jobs report out, and we're likely to see an increase of about 100,000 in the payrolls. That's not such a bad number, but considering the fact that we've only regained about 60% of all the jobs lost, we still have work to do. I think in terms of looking out over the next several quarters, it's important to point out that if you look back at GDP data going back to the late 1940s, economic expansions typically last about 6 years or so, while contractions last much shorter. So in our opinion, while the economic data could be somewhat weak in the first part of the year, we have multiple vaccines. The Fed is likely to keep rates quite accommodative. We just had another fiscal package. So we think that the economic recovery remains on track as we head through the next several quarters.
Well, Michael, I know you're not a day trader. Don't worry about that. But we did have one of the worst starts to a year ever for the S&P 500 yesterday. What do you think happened?
Yeah, yesterday was certainly not the way you want to start a new year. I think there were a couple things going on. As you just pointed out, there were some concerns ahead of the Georgia election coming out later today. If the 2 seats in Georgia go to the Democrats, there's a greater possibility that we could see increased taxes and legislation or regulation. There's also, yesterday, we also entered the new year of 2021. You could argue with valuations and sentiment levels maybe a little bit stretched. And there could also be some concerns out there that the rollout of the virus, while it's very exciting, and we've never developed vaccines as quickly as we have in the past, the rollout of the vaccine, you could argue, probably hasn't gone as smoothly as expected, at least in the first few weeks.
Yeah, certainly not. But we are getting there, and we're actually one of the top countries on a per capita basis. Israel, they've figured it out. They've got about 12% of their population already vaccinated, Michael. So how do you convince, with all those things, the market multiples, maybe not at extreme levels, but they certainly are elevated. I won't say the market is priced to perfection, not my job, that's yours, by the way, but we certainly are elevated enough where things have to go right. What is your biggest worry for the year from an equities perspective?
Well, there are really a few things that could go wrong. One is obviously the vaccine rollout doesn't go as smoothly as expected. There's also the possibility that the Georgia race doesn't go the market's way and we get an increase in taxes. Obviously, that's a big wild card. Our thinking is that if the Democrats do win the 2 House seats in Georgia, Senate seats in Georgia, that the Biden administration has sort of signaled they're more of a centrist administration. And our hope is that they'll focus more on the economy in the first year as opposed to thinking about raising taxes. And if that were to be the case, maybe that'll be more of a 2022 event. The other thing is the Fed has signaled that they're likely to keep rates very accommodated for the next few years. If there was a policy mistake by chance and they signaled that they were likely to raise rates before the economy was really ready for that, that could be a problem. And last, I would just say that, as we talked about, valuation levels are pretty full right now. So we really need earnings to come through over the next few quarters to help support higher stock prices.
Shepard Smith here. Thanks for watching CNBC on YouTube.